Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, April 30th, 2012 is sponsored by Realtik. All right, let's get right into it, folks. Very quiet market today, mostly because you had a very wild week last week. We saw selling early last week, then we had Apple earnings, the Federal Reserve, earnings from a lot of other companies that propelled the market sharply higher. And then ultimately, we're seeing a Monday, which is like a hangover effect. Nothing really happened over the weekend. The markets are using it to take a breather. And you can see today the markets are lower. Dow down 37 points, NASDAQ down 21, S&P down about 7.5. Basically a 0.5% drop on the indexes. But it's a very quiet, tight range bound market. You can see initially we opened here and we sold off. Once we came to this orange trend line, which I had on my charts long before today as a key support area, we just hit it, bounced, hit it, and have just bounced around it the whole rest of the day. Very tight range over the last couple hours, about a 25-cent range on the day. Good scalping this morning, though. I will say that. For those of you in the intraday stock chat, definitely a good scalp. We scalped the orange trend line right here on the spiders. There was an Apple scalp earlier this morning as well. Apple's actually been getting hit pretty sharply. Let's take a look at AAPL here. Down $16 on the day, making an actual bear flag now. Maybe it breaks down a little bit more into the end of the day. So, again, Apple's under pressure. That's why actually the NASDAQ is leading the drop today, down 0.7%, while the S&P is down 0.5%, and the Dow Jones Industrial Average is just down 1/3% today. All right, going back to the SPY, I just want to show you a couple other keys to today's action. Number one, the overall pattern intraday is bearish. There's no denying that. You have the gap down and the fall in the first 30 minutes, and then the sideways consolidation that is known as an in spirit of bearish consolidation pattern and should be respected. Even though we have extremely light volume, there is always a chance that this pattern could play out with a sell-off into the end of the day. If you sell off, you will have a little bit of support right here at this pink trend line, which is right around the 139.45 level on the SPY. But more likely than not, you'll have another key level right here, which will be a better support at 139.25, and then the 200 moving average just below. All right, so I'm going to call this one minor, this one major, and the 200 major. All right, so obviously for me personally, I probably will not scalp the pink trend line at this time. In fact, I'll erase it for now, just because, again, we've consolidated for so long above it. It makes me think that if we do break down, which it looks like we're trying to do now, you could flush at least down to this next level here, which is actually a very, very good level. And that's, again, at 139.25. I repeat, 139.25. All right, so that's what's going on there on the SPY. Let's take a look at the dollar today. Dollar is basically flat, which makes sense. Remember, if the dollar's not moving, the markets aren't moving. It's that simple, because the markets move inverse to the dollar. So if the dollar's spiking, the markets are dropping, and vice versa. If the dollar's dropping, markets are spiking. Therefore, no action on the dollar leads us to believe that there's very minimal action in the market. Taking a look at gold, GLD. GLD slowly floating higher. You can see it actually had a gap down today and has floated nicely higher here. So it's not up a lot, only up 41 cents on the GLD, but nonetheless, from the lows of the day, that's a decent move up. And the SLV, which is the silver ETF today, if we take a look at that, same general pattern, a little bit more volatile intraday, actually just hit the 50 moving average right here. All right, a couple stocks in motion today. What are they? Well, one stock I think is an interesting small cap, and I usually throw out one small cap in this video just to give you guys a sense. It's actually a small cap I did pick up today myself at 12 cents here, is SAPX, 7 Arts Entertainment. And the reason why I picked it up is they just signed a deal to do a big motion picture, and they brought the person who did Harry Potter and the Matrix on board. So to consider as cheap as this is, and we all remember what happened with Lionsgate Entertainment and stuff like that and how much that went up, to see someone of that magnitude come into the company to do this type of motion picture, who again did Harry Potter, which we all know that one as the money that thing made, it does make me think as a swing trade, as a longer term hold on SAPX at the 12-cent range, it's a relatively low risk. Yeah, it could go to zero, so you lose 12 cents a share. I think it could go to 50 cents on the other side if it really starts to take off. And that's my hope in by picking up a tiny, not only percentage of my account is very minor that's invested, it's almost like an option here, but for 12 cents I'm willing to take the risk to possibly make 3, 4, 5 times my initial investment on this SAPX over the next multiple months. All right. And again, keep an eye on that one. You can see it's trying to get above the 20 moving average. If it gets above the 20, it could actually run to the 50 moving average, which would be around the 17, 18 cent level. And then if it really gets squeezed, you could see it go much, much higher. All right, right now it's trading just above 12 cents on the intraday period. Another stock in motion today, BKS, signing a deal with Microsoft, essentially going into the online books type deal here. This stock had a huge gap up and has sold pretty amazingly well since the open. And the reason why such a gap up this morning, the amount of shorts in this thing, get this, about 65% of the float is short. That is insane. And that's why it's up so much on this deal, because a lot of shorts got crushed. And then ever since it opened, it's kind of such volume, and it's allowed a lot of the shorts to get out. And then once that buying from the short covering comes out, you can see the stock coming down here. Nonetheless, a great move, up $8.27. But again, just so many shorts got. And this is why shorting it can be so dangerous, because you have these scenarios where you're short a stock and you wake up and it's up $10 on you, or almost 100%. 100%. That's pretty bad. I mean, that hurts as a short if you're in that. Obviously, I wasn't in that. I would never be putting myself in that position to be in something like that, knowing that that could happen. It's like going short research in motion now. I'd only be a buyer if it pulls back, because you just never know if they're going to get bought out. Now, they may never get bought out, but the thing is, you just don't know. It could happen. Okay? A couple other stocks in motion. We talked about Apple, obviously, today. Apple's now down $18. It's still $1 or so off the lows of the day, but it is coming down. I do have a master level of support on Apple. I want to show you guys these levels here. This is your first key level of support right here. If it comes down here, you should get a bounce on Apple. That's at the 582.75, 583 level. And then this is a really good level of support right here on Apple, which is at the 575 area. So those are your next two key supports. And if you continue to see selling on Apple, I mean, in theory, the way it's acting here, this could come all the way back in and really eclipse the whole earnings move, which I think is great to see. I mean, we called the top on Apple when it was above 600 before. It collapsed down to 560, and then all of a sudden it was back above 600, hitting a high of close to 620 last week on earnings. And, a lot of people went right back on the bandwagon. And for me personally, no way. Apple still does not justify where it is short term on the chart. It needs to pull back. Sure enough, look at since then. I mean, this thing has come right back in. It's only about 25 bucks off these lows now. After being as high as 615, it's back to 585. That's a $30 pullback on Apple. Okay, so I'll be watching this, and again, there will be levels where I'll scalp. I scalped this once today beautifully, made a buck on the first half, $2 on the second half of that scalp, and that's what we do in the intraday stock chat here. If you want to come join us, there's a 7-day free trial. In addition, if you're a swing trader, this 7-day free trial extends out to the research center, which is geared towards swing traders and investors. And again, you just come and enjoy, and you profit with the pros. I mean, it's that simple. We put out swing trade alerts. We teach you our proprietary guidance and everything else, and that's inside the research center at inthemoneystocks.com. It's an awesome arena of different methods to learn the methodology here at inthemoneystocks.com. Trades, analysis, you name it, it's there for you, and you can profit like the pros. Big money. All right, pretty much every day we're just hammering out money left and right, whether it's swing trades or day trades, and it's all for you here at inthemoneystocks.com. All right, on that note, folks, I'm going to get back to trading this afternoon as the markets are getting a little bit more active here in the later afternoon session. Hopefully, I can bang out a few more bucks and put that in my pocket. Hopefully, you come and join us and do the same. We look forward to having you here at inthemoneystocks.com. Take care.